Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the consumer price index related to United Kingdom. The next one is the German flash manufacturing PMI related to Europe. Let me talk about the first one, the consumer price index. Y or Y means year over year. So what is consumer price index? Consumer price index measures the annual change in the price of goods and services purchased by consumers in the United Kingdom. It is a key indicator of inflation and reflects the cost of living. A higher than expected reading suggests rising inflation, increasing the likelihood of tighter monetary policy from the Bank of England, often supporting the British pound and pushing GBPUSD higher. Conversely, a lower than expected result may indicate easing inflationary pressures, reducing the need for policy action and potentially weakening the pound, leading to downward movement in GBPUSD currency pair. Now, let me further discuss the event details. The news event that we got, Consumer Price Index, also known as CPI, on April 22nd at 6 a.m. UTC time. The previous reading was 3.0, forecast 3.3. Actual number we got is also 3.3. The currency pair to focus is the GBPUSD currency pair. Now, the number we got is 3.3%, which is related to the forecast level. So we got the matched expectations. As far as the price action of GBPUSD is concerned, the price action of GBPUSD moved higher after the release. Let me show you the price chart. This is the price chart of GBPUSD currency pair. So over here, GBPUSD actually moved up on April 22nd. So the price action of GBPUSD currency pair moved up after the news buyers stepped in inside the forex market. The data meet expectations. It did not create negative pressure. The move suggests confidence in the pound. The upside move may also be supported by US dollar weakness. The key drivers behind the move. Actual data matched forecast at 3.3%. Forecast was 3.3%, and the actual number we got is also 3.3%. Inflation remained stable, no negative surprise in the data. Positive market sentiment supported the GBP. So that was the main reason that GBPUSD moved higher after the Forex news release. The technical and sentiment considerations. The GBP USD currency pair showed bullish momentum after the news release. Short-term sentiment turned positive. Buyers remained active in the forex market. The move was supported by stable inflation data. Further direction depends on US dollar strength and market sentiment. Now, let me discuss the trading outlook. The short-term bias is bullish. The pound remains supported after the news release. Further upside depends on continued buying interest. Watch out for pullbacks if traders take profits. Forex market focus may shift to upcoming US data. The overall analysis and key takeaway is UK inflation came at 3.3%. This matched the forecast and showed stable price pressure. The price of GBP USD currency pair moved higher after the news release. Market sentiment remained supportive for the British pound. The final key takeaway is the previous number was 3.0%, forecast 3.3%, actual data we got is 3.3%. So this shows stable inflation supported the British pound, and that was the main reason that the price action of GBP/USD currency pair moved higher as market sentiment stayed positive. The next one is the German flash manufacturing PMI in Europe, and we're going to focus on euro dollar currency pair. Now, let me explain a little bit. What is German flash manufacturing PMI? The German flash manufacturing PMI measures the preliminary monthly change in business activity within Germany's manufacturing sector. It is a leading indicator of economic health because it reflects trends in production, new orders, employment, and business confidence. A higher than expected reading typically supports the euro as it signals expansion and improving economic conditions, which can push the euro USD higher. A lower than expected result may indicate contraction in the manufacturing sector, weakening economic momentum and putting downward pressure on the euro. Now, the event details. The German flash manufacturing PMI number, the previous number was 52.2, forecast 51.4. The actual number we got is 51.2. Market context and release outcome shows the actual result came in at 51.2%. This was below expectations, below the forecast level. Due to this reason, euro USD moved lower after the release. Let me show you the price chart of euro dollar currency pair. Here's a daily time frame, and right over here the price action of euro USD dropped over here. Euro USD moved down after the forex news because the sellers entered the market. The data showed slower manufacturing activity. This reduced confidence in the euro. The downside move reflects concern about economic momentum. The key drivers behind the move. Actual data came at 51.2 below forecast. The forecast was 51.4. So the slower growth compared to previous 52.2 number So this shows a weaker outlook for manufacturing sector and negative euro sentiment after the news release. The technical and sentiment considerations. Euro USD showed bearish movement after the news release. Short-term sentiment turned negative. Sellers remained active in the currency market. The move was supported by weaker economic data. Further direction depends on US dollar strength and risk sentiment. Trading outlook. The short-term bias is obviously, bearish. It's down. The euro remains under pressure after the news release. Further downside depends on continued selling interest. Watch out for pullbacks if traders take profits. So as of today, you can see the price action of Euro USD is trying to drop. This looks like to me market is probably going to drop and breaks below this swing low over here at 1.1668 level. Market focus may shift to upcoming United States of America financial data. Overall analysis and key takeaway is Germany's manufacturing PMI came at 51.2. This was below the 51.4 forecast number and lower than the previous 52.2 number. The data showed slower growth in the manufacturing sector. Euro USD moved lower as market sentiment weakened. Final key takeaway is the previous number was 52.2, forecast 51.4, actual number we got is 51.2. Weaker than expected PMI put pressure on the euro, and due to this reason, euro USD moved lower as confidence in growth declined. Now, let us take a look at previous week global market trends, and I'm going to discuss the euro USD and USD CHF currency pair. So let's start with the euro dollar first. As far as the weekly chart is concerned, it seems to me the trend is up over here. It's a bullish trend over here in euro USD. Next, we have the daily time frame. The daily time frame actually shows kind of a break over here, right around this area. So we might get a decline in the market in euro USD, or maybe market find some support over here. I would prefer to draw a support level over here. So as long as market is not hitting this horizontal support, the chances are high that euro USD is going to keep the bullish momentum and we might get further upside. Next, let us take a look at US dollar Swiss franc currency pair. As far as the Swiss franc chart is concerned, the trend is down in USD CHF currency pair. In a daily time frame, we got this deeper pullback, and now USD Swiss franc is actually trying to rise up over here. In 4 hour time frame, looks like to me we're getting a bullish rally over here. So the way I see USD Swiss franc is probably going to uh, continue the rise. Over here, we actually got the overlap. So this is telling me that we might get some sort of further, bullish price action in US dollar Swiss franc currency pair. Looks quite possible. Next, let's go over to the current week macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. Okay, the first one is the Consumer Price Index CPI in Australia. Second one is the official bank rate in United Kingdom. So these are the upcoming, I would say, current week important news announcements that are most likely going to affect the prices in forex market of different currency pairs. So the first one, let's start with the first one, Consumer Price Index CPI. M over M means month or month in Australia. So what it is? Well, the Consumer Price Index M over M measures the monthly change in the price of goods and services purchased by consumers in Australia. It provides a short-term view of inflation trends. A higher than expected reading indicates rising inflation, which may increase expectations of tighter monetary policy from the Reserve Bank of Australia, often supporting the Australian dollar and pushing AUD/USD higher. A lower than expected result suggests weaker inflation, which may reduce the need for policy tightening and can put downward pressure on the Australian dollar, leading to a decline in the AUD/USD currency pair. The Consumer Price Index, also known as CPI, the previous reading was 0.0%, forecast is 1.3%, actual data not yet released, but it is going to be released on April 29th at 1:30 a.m. UTC time. Forex traders will watch it. If inflation picks up as expected, a strong increase may support the Australian dollar. A weak reading may raise concerns about slow economic activity. Market participants will also watch US dollar strength and global risk sentiment. Now, why AUD USD currency pair could move? Well, there are key drivers for price action. Let me first show you the chart of AUD USD currency pair. Is the daily time frame, and then we have this 4 hour chart over here. The key drivers for price action include actual inflation versus forecast and previous reading, expectations for Reserve Bank of Australia policy, short-term Australian dollar momentum, US dollar direction, and market sentiment. Even small surprises can cause strong volatility in the forex market. Inflation data is a major driver in the currency market. Technical and sentiment considerations. AUD USD may see sharp movement during the Forex news release. Forex traders react quickly to inflation data. Market sentiment will play a key role. US dollar strength can influence direction. Key technical levels may act as support or resistance. Uh, so the way I see, we have this nice area over here. So we have this support over here in AUD USD currency pair. And I would say as long as price action is not breaking the support level, to me it is still an uptrend going on. So I have a neutral bias before the release. The upside potential is there if CPI comes above 1.3%. This may support the Australian dollar and push the price of AUD USD higher. The downside potential is there if CPI comes below 1.3%. This may weaken the Australian dollar and push the AUD USD lower. So expect fast price action after the news release. Watch out for the first reaction and possible pullbacks. The overall analysis and key takeaway is Australia's CPI is expected to rise from 0.0% to 1.3%. This shows a possible return of inflation pressure. This result will play a key role in short term AUD USD direction. Forex traders should watch the data closely. Final key takeaway is the previous reading was 0.0%, forecast is 1.3%, actual data not yet released. Higher than expected inflation may support the AUD USD currency pair. Lower than expected inflation may put pressure on the Australian dollar. The next one is the official bank rate in United Kingdom, and we will get this news announcement on April 30th at 11 a.m. UTC time. Now let me explain what is official bank rate in United Kingdom. Official bank rate is the interest rate set by the Bank of England. It controls borrowing costs in the UK economy. It is one of the most important tools for monetary policy, and it directly impacts inflation, spending, and investment. A higher than expected rate or a rate hike usually supports the British pound. It shows tighter monetary policy and helps control inflation. This can push the GBP USD currency pair up. A lower than expected rate or a rate cut may weaken the British pound. It shows easier monetary policy and lower borrowing costs. This can push the price of GBPUSD to the downside. Now, the even details. The official bank rate in United Kingdom. We will get that financial news release on April 30th at 11 a.m. UTC time. The previous number was 3.75%. Forecast is also 3.75%. The actual data not yet released, but it is going to be released on April 30th at 11 a.m. UTC time. Forex traders focus on the Bank of England policy tone. Even if rates stay unchanged, guidance can still move the currency market. A hawkish tone may support the British pound. A dovish tone may weaken the British pound. Market participants will also watch US dollar strength and risk sentiment. Now, why GBPUSD could move? The key drivers for price action includes actual interest rate versus forecast, Bank of England forward guidance, inflation expectations in the United Kingdom, short-term British pound momentum, and US dollar direction along with global market sentiment. Even without a rate change, volatility can be strong. Forward guidance often drives bigger moves than the rate itself. Technical and sentiment considerations. GBPUSD currency pair may experience sharp volatility during the release. Forex traders react quickly to central bank decisions. Currency market sentiment will be very important. US dollar strength can influence direction heavily. Key technical levels may act as support or resistance during the movement. The upside potential is there if policy tone is hawkish. This may support the British pound and push the price of JPUSD higher. Downside potential is there if policy tone is dovish. This may weaken the British pound and push the GBPUSD to the downside. So expect strong volatility after the news announcement. Watch first reaction and possible retracements. Overall analysis and key takeaway is the Bank of England is expected to keep rates unchanged at 3.75%. The focus will be on future policy direction. The outcome will strongly influence short-term GBPUSD movement. Forex traders should focus on both the rate and the statement itself. The final key takeaway is the previous reading was 3.7%, forecast 3.75%, actual data not yet released. So no rate change is expected, but we could get a change in the data. So GBPUSD will likely react more to policy tone than the rate itself. Now let us take a look at current week Forex market trends. And I'm going to take a look at euro, dollar, and GBPUSD currency pairs. So let's start with the first one, the euro dollar currency pair. The trend is up over here in euro USD currency pair. Next, in daily time frame, here's the support. This is basically the most recent swing high over here, which is basically acting as a support level. Previously, it was working as a resistance area, but once market manages to break above, once market managed to break higher, now the pullback is probably going to find support over here. Inside a 4 hour time frame, I was kind of expecting this as one, two, and probably a three wave to the upside, along with less pullback to the downside. But overall, we got the drop in the market of Euro USD currency pair, and we'll see how it goes. This support over here, right over here, this is the area where market could find a good support zone. Okay. Next one is the GBPUSD currency pair. The weekly time frame shows a clear uptrend over here. Then we have the daily time frame. The daily time frame it looks a little bit bullish. Next, we have the 4 hour. The 4 hour time frame is showing that market is probably trying to drop over here. So this is the zone or an area where we could look for potential buy trade setups. Next, let us take a look at US dollar Swiss franc. Okay, US dollar Swiss franc. The trend is down inside weekly chart. Then we have the daily time frame. It seems to me we got this as a possible one, two, and three. So it's a three-wave move, and we might get some sort of a sideways type price action over here, and then maybe USDC franc is going to rise up over here. Next, the spot gold is the XAUUSD spot gold. Weekly time frame, the trend looks obviously up over here. This is a simple uptrend going on in XAUUSD currency pair. As far as the daily time frame is concerned, I expect price action to drop first and then rise up more. Okay. In 4 hour spot, gold is actually dropping. So we have this buy zone area over here, which is basically the old swing low area. Okay. I will take a few minutes now for questions and comments. And if you have any questions or comments related to today's Forex trading webinar, feel free to type them in the chat box. I will be happy to answer your questions. Okay, let's see. Hello, and Okay, I see a question. How do you check for resistance and support? Basically, what you can do as a trader is a simple way is to look for old swing highs and old swing lows. They usually provide support and resistance. For example, if I show you a chart of euro dollar over here, this is the old swing high, and now market rallied up. Here's the old swing low. This is the old swing low. So what happens is that once market takes out the high, then that same level which was acting as a resistance now turns into a support area. Okay, another question is related to CPI, the consumer price index. Yes, the CPI, also known as Consumer Price Index, is generally considered a credible and important tool for fundamental analysis, especially in Forex market and in macro trading. But it is not perfect, and understanding its limitations is just as important as using it. CPI is credible because it is officially published by government statistical agencies and follows a structured methodology to measure inflation based on a basket of goods and services. The central banks like the Federal Reserve, Bank of England, and ECB rely heavily on it when making interest rate decisions. So that alone makes it very influential in the currency markets. So I hope I answered your question. So let us review what we have learned today. We discussed about the consumer price index in Australia, official bank rate in United Kingdom, and we also discussed about the Euro USD, GBP USD, USD Swiss franc, and spot gold. These are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, May 5th, 2026, 12 p.m. UTC time at the same time. That's all from my side for now. Have a great day and goodbye.